candlesticks, and just to continue with what we spoke about last time, which was on technical analysis and then fundamental analysis. We actually need candlestick. We need to understand candlestick and anatomy for us to be able to use for us to be able to use it in technical charting. So if you remember, we spoke about different types of way of reading the charts, we spoke about Japanese candlestick, lines, this and that, and but we decided that as a day trader, the one that we actually need, because it provides more informations and readable informations, by the way, like candlesticks. That's why we are focusing on candlesticks as a day trader, and that's what most of day traders use. So um aside from that, the fundamental also we spoke about, which was the news release, which I said you should check it out and tell me maybe what you think about the news. We're gonna be continue. I'll talk. I will speak about that part briefly, so you people should have an idea on how I approach the fundamentals and how I deal with. I combine the fundamentals with the technicals, or combining the technicals with the fundamentals to be able to trade on a daily basis. So this was the news from last week. This was the dates, and we spoke about NFP and then CPI. So I want us to like basically focus on more on the NFP, uh, which was it came out here. So here I told you guys you should read basically the actual and then the forecast. The actual and the forecast, and then there's gonna be a message release. So this was what came out that day. They said okay, I also said something about there was a delay on the NFP release, so this was the reason. They say release dates delayed by 5 days due to the US government shutdown. So that was the reason why they reported it. If not, it was meant to be the week before. And also change in the number of employed people during the previous month, excluding the farming industry, actual greater than forecast, is good for currency. So the actual came out to be greater than the forecast. So they forecasted a certain number, and then when the actual came out, the news release, it was even greater than the forecast, and the result is good for the currency. You can even just focus on just what they're saying here, which is good for the currency or bad for the currency, and which this is where what we really need here, which simply means what whenever the news release is good for the currency, it simply means it's bad for gold. So USD and gold usually have this the correlation and between the two, that whenever the USD DXY currency is good, gold is bad. Whenever it's bad, gold is good. So it goes up, gold come down, it goes down, goes up, and almost the same thing with other pairs. So whenever you are pairing to even currencies, whenever one is up, the other one is down. It's the same concept basically. So here, don't forget, we just read about this. Now before that, we should go on the chart and let me show you something. So that day was here, market was at this level here, and don't forget we said something about key levels, right? So let me kind of like delete these lines, so I will kind of like continue from where we stop at. So you remember, guys, we had we need to mark key levels, and this is how we said we're gonna be marking something like that. So we can do maybe here, then we start having this, and something like that all the way to here, you know all the way to here, and then we also have let me just complete this, right? So that's what I want to mark. So what I just did here is just marking high to low, higher high, low, higher low, higher high, 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 and so on. So I'm just focusing on just marking those because I want you guys to be able to relate with what I said last time about key levels, which simply means what wherever we have multiple highs together, um either previously or now, but shall we have somewhere that like we have highs that are like in common, that are like aligning in common. So we see that those places as key levels. And then don't forget again, we said key levels are just simply either highs or lows, and then those key levels also we see them as support and resistance. So depending on where the market is at that particular moment. So whenever the market is above any of our key levels, we see it as a support. Whenever market is below our key levels, we see it as a resistance. So below and above again simply means what? If the market is standing on the support on the key level, is already is standing on it. So we broke above it and we're standing on it. We are already seeing it as a support. Or we broke above it, we already stood on it, so we are coming from it. So it's already a support. So it's a floor, like a home. When market broke above and then standing on it, we see it as a support. Or market is coming from it, we see it as a support. When market is beneath it, we see it as a resistance. Or when market is coming from it, we see it as a resistance. So it's the same concept here. So why we need this, we need to combine technicals and fundamental, what we just explained now, what we just read from the news release. So before the new release, this is what you should do first. And you should already mark your levels down, your key levels down, and then depending on where market is at that particular moment, you define if is a resistance or support. So you mark your key levels now, which is what I'm just currently doing now. And we already did it from the other video. So I'm just doing this because I want you guys to relate and understand quick on the technical and fundamental reading together on news release. That's how I approach the market, and I want you guys to learn about it quick because this happened in real time and it makes more sense for me to explain it immediately for you guys to grab it once for all, because we spoke about this fundamental before the release of the news, and I stopped the video. I intentionally stopped that video there, knowing that once the news release, you people will tell me in the comment section, and then I'll be able to continue from there. And that's the main reason why this video took so long, because I wanted to the news release and then drop it. So this is what I'm trying to say here. Don't forget, so here, from here, we have multiple touches already here, and this is already a key level here already. This is one. We can already see this as key level. The reason why is because of we have low touches multiple times. We have already here, this is already a key level because market created a low here, a high here, another low here. Even here also, as well, we can even consider this together. This is another key level again. You understand? Coming back here, another high. Yes, do we look previously if you have something behind it that is coinciding? Yes, we do. But let me just skip this one and go ahead and look for something else. We have a high here. Do we have something that is coinciding with this one? Yes, we do. We can just mark all this together. We can still come here again. These highs together, multiple highs, as I said, key levels are just multiple highs together. We can still have this one too. You see, multiple highs together, and then common either previously, now, or so again, and so on. So we can still go ahead and mark more. So you mark everything basically, kind of like just go ahead and mark everything that you can see here. Do we have anything in common? We just have this one. Do we have anything in common here? Later we had this, but we can skip this one. Just mark multiples. Let me just mark it out. And then later on, after you do this, you kind of like remove the one that like more important to you. And then, so here we have a high again. We have a high again. Then do we have a high? We have a high here. We have a high here. And then the news release came out on Wednesday. So market was here that day. So we should mark this one. This was where market was at that particular day. I'm marking this because of we have high here, multiple highs. Markets went below it. It created a high here again, another high here, another high here. Don't forget is a zone, so it doesn't have to be accurate, you know. So even this one too is just simply same thing. It's just a zone. You can break it lower just to make it more sense to you. So for now, and this is on Tuesday, on Wednesday, exactly where I wanted it to be because of the news release was on Wednesday. Let's check it out again. The news release was on Wednesday, I guess. Yeah. So okay, yeah, Wednesday 11. You know, so it was 8:30. 8:30. I need to change my time later, but it's 8:30 here. So news release was here on Wednesday, so 8:30. So the news release somewhere around this candlestick. So what I'm trying to make here is that what you do this first. So you just see me. I marked so many key levels here. Which are the ones I need? I don't need this one because see where market was here. This one is too low. So I can just get rid of this. I can also get rid of this because market is still at this level. I might just leave I might leave this one or this one for other reasons, which are like, for instance, maybe take profits or where I see market going towards. But I'm not interested in that for now. I just want to make it cleaner, the chart cleaner for you guys to not be confused. So I'm deleting things that I don't need. I'm more focused on where the market is now. But I came from marking everything first, and then I'm deleting the one that I don't need, and I want to focus on the one I just need. So I'm deleting this as well. I'm also be deleting this higher highs and higher lows. I don't need them anymore. And then coming here now, do I need this one? I also do not need it for based on where market was at. Market was here. I don't need it, but based on where I see market drawing towards, I might need it. You get, but I will delete it again just for cleaning the charts, and that's how you end up coming with just this level. You know, we're just focusing on this one now. We're focusing on this one. Don't forget, we marked because of we have a high here, and even when market came here, it rejected massively. Sorry, I need to go back. We rejected massively from here, and then below again we touched here. We have a high here, so this is already a key level. Then we are since we are below it, we are seeing it as a resistance. So the moment you see this, you already know this is a resistance zone first. Then now you scale to your charts. You are waiting for a 8:30 to knock, and then what, you open, and then you're waiting for the news to release. Personally, I do not trade before news. I will trade after news. And yeah, I trade after news. And what you want to do is what, waiting for it. And then news came out to be what, actual greater than forecast is good for currency. It's good for USD, bad for gold. So bearish news is telling us we are bearish. Plus the fact that we already have a resistance that is telling us our market was already at a resistance. So that's already bearish already. Two confluences aligning. The fundamental is aligning with the technicals. So what we're looking for? Shorts, we are going down. That's just as simple as that. That's how you just combine technicals and fundamental. Nothing else. Now, let me give you guys one last thing that you should know about. I have learned over the past years that the chart does something. This is very, very important information I'm sharing here now. It happens that if the fundamental is going to be bearish, it happens that this market will find a way to go and sit beneath a resistance. Do you get what I'm saying now? Which simply means what? Since the fundamental is going to be bearish for gold and bullish for USD, this market already found a way and then went below and created the resistance at first, and then was just sitting below the resistance for the news to release, and then it goes down. That's something I learned. If it was bearish for USD and then bullish for gold, this chart will find a way to come and be above this level, and then that's gonna be a support instead. Or this chart is gonna find a way to come and be maybe somewhere here, okay, this has not happened. Then maybe somewhere here or somewhere here, and then it's gonna be a support. Do you understand now? That's something I just shared with you guys based on my experience and a time in front of this market. Now, you people should understand perfectly about bearish for gold and bearish for USD, bullish for gold. It's just simple as what gold is seen as safe haven for investors. You know, investors tend to like move their money quick from USD the moment they find out that USD is bad to gold, and then the moment they find that USD is good again, they move their money from gold to USD. So those investors, by the way, we are talking about real investors, not investor. You feel me? I'm talking about real investors, you know, not just by name, right? You know, not just by name. I'm talking to myself right now. So talking about real investors that like invest in like big 50, big 100, big 30, you know, those big companies, you know, those ones that transact globally. And you know, it also it comes back to what we define as trading. You know, those are the people that like trade based on what you need, exchanging stuff. So it's the same concept again. All together, it's the same thing. So they kind of like move their money based on say they trade globally, and they transact in USD. And if the USD goes down, it's gonna make them lose a huge money because they are working on interest rates. Don't also forget that we spoke about interest rates when we were talking about exchanging, you know, exchanging basically, and that's how we get to make money as well. So they are investors, they are kind of like smart, they don't want to be losing money unnecessarily on just the fact that USD is going down, and they have huge portfolio in USD. So the moment there's a news release and then the USD is bad, the guys move their money quick because USD is bad. The effect, the moment the news is out, the effect starts from that day, and then up to the next months, weeks and days to come, you know. So it can last weeks and months until maybe the economy gets better, or until there is a new news release again. You feel me? So that's just simply this concept. So these investors, it's just like me now personally. I don't use gold as safe haven because maybe I don't have that huge portfolio, you know, yet. But me, I also have my way of diversifying my portfolio. Basically, when you have personally, mine is USDT. Is this same USD that they are running from? Me, I'm using as safe haven. Whenever there is something going around quick with maybe Bitcoin, my safe is USDT. So just kind of convert my money quick in USDT and I'm safe. And same thing if I'm holding foreign currencies and I'm not comfortable with the currency based on the rate again. I just want to keep my money in USDT just to know that yeah, I have a fiat money that is stable. And that's basically the same thing here. And why gold favors them the more again is that the moment they are moving their money from USD to gold goes up, they make more money, they pull it out again. It's a win-win again, you feel me? That's just the concept. So that's all for the technical and the fundamental. I actually gave you guys a lot of and deep information on the fundamental explanation and reading. So you people should be observing it for the next news and to be released and next weeks to come. So just focus on reading the actual and the forecast. And whenever there's a news release, you see what the news came out to be, good or bad for that currency. You expect market to react off it based on where the technicals is locating at that particular moment, and that'll be all. So let's dive into the chart and speak about our candlestick instead. So candlestick is just simply what we were gonna be using to read our technicals, as I said, and it consists of what 4 different important parts. Here we have what do we have here? Let me try to draft something for you guys, maybe. So we're gonna be having something that looks like this, you know. This is basically candlesticks. This is one, and then as simple as that, this is just basically the anatomy of candlestick. You know, it opened here on a bullish trend, closed here, This was the highest point, this was the lowest point. Opened here on the bearish trend, on the bearish candle, closed here. This was the highest point, this was the lowest point here. So right now, what we need to understand here is, and how do we need this? We need this, we need to understand this for us to be able to identify the highs of a trend, because a trend highs tends to be a low of a candlestick and the highest point of a candlestick. And also for for us to be able to know whether we should take a trade or not, we need to know if a particular candlestick is still open or closed. You know, those are why there are still more multiple that I do use them for. So you should know, take note of those for now. Here again, I want you to understand that until this candlestick, until this candlestick is, until this closure happen, or this closure happens, there is no way of you saying that's all for that candlestick, because this candlestick might still do a certain things and end up going down, you know. So we can still go ahead and identify this in the real time. I don't know when the market is still open right now, so we should go directly and try to do that. So yeah, this is what I'm talking about. Here I'm using a 4 hours candlestick. You see this candlestick here in particular, just no, it didn't open now. Open since. I want a new candlestick that just opened now. So this one just opened now. Right now is looking red, you know, and you might think it's a bearish candlestick. But what if I tell you that this candlestick, to me, the way I'm seeing this market, it might close green? Who knows? I don't know. I'm just saying for now. But it's looking red. I cannot assume that it's bearish and then I should just go along and short or sell, you know. That's not how it works. But for now, this is the opening for now here, right here. Let me zoom in very well. So we should take note of that. So this is the opening. Yeah. No. Yeah, of course. This is the opening. Yeah. This is the opening. First, that's the only thing that is setting now. The highest point here, this is the opening now, and this is gonna remain the opening. That's what I actually need to tell you guys. There is no way this opening is gonna change. But this highest point, for now, this is the highest point. And for now, this is the lowest point. Then since it's still going, we cannot say the closure, you know, you get now. But this one, for now, this is it. For now, this is it. This thing can still change, because if this market pushes all the way to this level, it creates a new high, you know, which is likely to happen, because this, you can see we are in a 4-hour time frame. We still have like 2 hours to go for it to close. And this is another thing again, I think I told you guys to know, we have this timer counting down of the closure of each candlestick. So whenever you see it, you know that we have 1 hour 42 minutes to go for this candlestick to close. So I know that within 2 hours to come, there's a likelihood for this candlestick to either come here and create a new high, or either come here and create a new low, and then finally decide where it's closing at. So for now, we don't know where it's closing at. For now, we don't know where it's closing at. For now, this is our high. For now, this is our low. But the opening is stagnant, because that's where it opened. So that's one thing. I don't know if I'm making sense, but you should take note of that. And it is looking red for now, because we are below the opening. The moment it goes above the opening, is going to turn to green, and which brings us back to this place here when we say the opening of a green is below and the closure is above, and the opening of a red is above and the closure is below. So it makes more sense. Now let's go again. Let me explain. Wick. So this is what I'm talking about. You see, since we are below here, the opening is above, we are looking red, you know. The moment it goes above, we're looking green, the opening starts to become green. Now, why I said earlier that it's likely for it to become green because it's just showing red for now is simply because you can see that we keep going up, down, even fine we have it down, but it's better you bet on keep going up than trying to reverse it. Yeah, so that's for now on real time what's happening now. That's it. We're gonna check this out later, but let me just I will leave the opening for now, and let me just copy this, maybe bring this here so we can use it later. So we have this opening here. I want to clone it quick. We're bringing it here. We also want to bring, so we have the opening for now, and then we should do this instead. I want to bring, you see it's changing color because we are both, the opening stays the same. It already changed color. This might just be changing color as long as he wants, and until he decide where he wants to go to. Finish. That's just it. This is the opening, and this, let me mark this as the high. Let's observe if this video is still going on until it changes. So let me put this as the high here, and then this as the current low. So put the text as high, current high. I don't want to do that mistake. Oh, not current high for now. For now. For now, this is our high. Also down here, for now, low. This is already, it's not changing. No way it's gonna be changing. That's just the opening, or the way you open that. It's not changing. Opening, period. So let's leave this one, and then kind of like talk about candlestick that already open and closed. So I just gonna be explaining what happened with there. So we should use this one for now. For instance, this is, guess what was this? You guys should tell me. Low, high, opened, closed. For this candlestick, that's just all. So here should be our low. Let me use the text instead. Here should be our low, high. I want to write it all down, then I just move it later. So opening here, low here, high here, then closure. No, closure here, then opening. Yes, sorry. You feel me? Doing that on this particular candlestick. This one, he opened here, went, did his thing. So many things happened internally within that particular time frame, which here we are in 4 hours. So many things happened up and down. It can, as it opened here, it can move all the way up here first, then come down, create a for now low, the way we are having a for now low somewhere here, then still went ahead again, came out, stopped here, then came down again, took out the for now low, created another for now low, and then so on again, came back to this for now high that was somewhere here, then finally took out again, then did this thing, finally came down, took out the for now low again, then give us another for now low, and then went up and all the way, it now end up closing here. The moment it closes here, we know that this is the high and this is the low. You feel me? Now, why we need this? We need this because after this closure, we want to be able to know where to be able to mark our, either we are marking a higher low, a higher high, a higher low, wherever we are directing our trend to. That's where we need it for, So for instance, now in this case, we have this high here, we have the opening, we have the closure here, and then we still have a So let me just keep this here. You guys should understand. So we have a new candlestick that opened here. This is the opening of this candlestick. So usually the opening of a new candlestick is usually where the next candlestick, the opening of the next candlestick is usually the closure of the previous one. You get? So now that's why they say where one person your case stop from, now there another person will start from. I don't know if you're getting. I just continue. So this is the opening of this one. This is the lowest point. This is the closure. This is the highest point. You know, good. Opening, low, closure, highest point. This is an interesting candle to actually explain something, but you still get the point. This is still the highest point. I like to use, whenever I see candlestick like this, you know, whenever we start having a, let's say this zone here, we have start having a low, lower low, a higher low, a lower low, a higher low, a higher high, a lower low, a higher high, a lower low, a higher high, a lower low, a lower low, then a higher high. Fuck, a lower high again, bro. A lower high, bro. Let's start. High, low, lower high, lower low, lower high, lower low, lower high, lower low. I'm in the mood now. So now we are expecting it to continue giving us same thing, you know, keep going down. It should keep going down. That's what we should do. We should anticipate something like this. Okay, you guys might be asking, why am I jumping up and down? Okay, let me just put it this way. This way. So this, let's use the candle, the high, because you might be asking, you why are you teaching us the high of a candlestick, and then instead of you to mark the high of a candlestick as our lower low and our higher low or lower high, you're then marking, you're jumping some candlestick. Yeah, that's how we do it. The reason why I'm jumping some candlesticks is because I told you last time. Okay, let's say I did not tell you. Let's do it again. Okay, so what we want to do is we want to see this. So this move here represents our red candle here. This is our red candle, and then this represents our green candle. Do I need to change the color again, guys? Guess I should. Green. So this represents our green. Do I still need to mark the wick? I guess I should then. I don't want to change that color, guys. We leave it. It's the same thing. You understand? So, why am I dropping some candlestick? As far we are having this. So we are having this. And then we are having like multiple colors together. It tends to be, we know that this is a high. And I think I should bring out the wick again, because we need to mark the wick, the high from the wick, as we said. You know. So as far we are having this, so this is the highest point of the candlestick, this is the lowest point, high, lower low, high, lower high, lower low, lower high, lower low. You understand? We know that already. But what if we just skip all this and then know that it's already one internally, and then we put it together like this? And then we put it together like this, and then kind of consider this full here as one. Then we just, instead of doing those details, and we just do from high to low. Then the next candle that is coming is red. We can do that. Are you guys okay with me? Okay, we can still do this again. We can still do this. We can still just do this. We already marked this one first. We can just leave these two and take into consideration this last one. So this last one, so the red to the green. you get now. That's where I'm coming from. If you don't understand, please, if you don't understand anything, just ask me in the comment section, and then I'll be glad to re-explain to you guys. Let me delete everything quick. So basically, that's what we have here. Same thing. This same thing I just explained here. So that's how I did it here. So the moments we have, so we skip 1, 2. Now we have a green here, but you might be asking yourself, why is this green and this is red? So this should be bullish. Yeah, it should be bullish. But so what? It's not bullish. It's still bearish. You understand? It's still bearish. The only time we see it as bullish is when we have a change of character. We have market taking out either this high, if it was this high we're looking at, or this one we're looking at. In this case, I was looking at this one. Yeah, it's actually this one. And some cases I might be looking at this, some cases I might be looking at this. So depending on the one you're looking at, I was looking at this. So you tend to mark the highs and lows based off the color of the candlestick or the one that took out the low. Let me take it that way. Let me explain. It's easier to say it that way. The low, so we have a high. This is a high because this one took out this low or this low. We have a low here, we still have a low here, we still have a low here. But what if we put everything together as I did last time? I just did now, and I marked the candlestick and I put everything together. So let's say this is our low. So the candlestick, the high, the one that took out this, so we took out this low here. Did we take out this low? Yeah, we took out this low here. We created a high, another low again, a high, another low again. Then this is our high that went down. This is the one that went down. So the moment we broke above here, which is here, we already changed character here, which is gonna be what we're gonna be talking next time. So we did this. And don't forget, we stopped here again, and then we keep doing this. And then the reason why we stopped here is that we already marked here as a key level last time. Just now, and then is a resistance zone. I think I'm going into details already. We're meant to just talk about candlestick. I will explain everything later. I'm gonna explain everything later. So my goal here is to just tell you about this candlestick opening and closure. I will use a higher time frame. Then we just continue our explanation daily. So let me use a higher time frame and then explain it. This is an interesting candlestick, so explain something as well. So here we have our opening here. So here we opened here, and here is also our low. That's why I'm actually want to mark it. I don't know why I'm not marking it. Here is our low and our opening. Here is our closure. Here is our highest points. So low and opening are together here. Closure is here. Highest point is here. Lowest point, opening, and so on. Here, high, open, close, low. The reverse on sell. So what you guys gonna do is that after this video, you should try to mark this out yourself on your charts, and then by doing so you get to understand it better. Then if you don't understand anything, or I do say things and I contradicted myself, please let me know in the comment section, and then let me explain further. Here I forgot to tell you guys, so this is called the wick, and I was talking about the anatomy of a candlestick. I was meant to tell you this is the wick of the candle, this is the body. So wick, body. So wick, body, then wick. So all this together, yeah, they are wick. Like, like a candle. They're actually a wick. actually have a candlestick somewhere around. I do have a candle somewhere around. Oh, fuck. Now, this is the opening for now here, right here. Let me zoom in very well. So we should take note of that. So this is the opening. Yeah. No. Yeah, of course. This is the opening. Yeah. This is daily. This particular candle is this one here. Yeah, right here. You can see we have something that is looking exactly like this, which signify strong momentum, also signify imbalances as well. So usually when market doesn't have this week down here, it's something that I usually use as well. I see it as imbalance, and market tends to come and feel it later. So that's another thing. So the week and then the body here. This is the body here. And that is just gonna be all for us on candlestick anatomy. Basically, we already said it all. There is one thing that we're gonna be talking about with time, which is, or you guys will get to understand it yourself with time, is the way we open, and this is what is happening right here. I guess let me see what we just marked down, and we said we should observe in 4 hours. Did I delete it? I did. We marked something here, and then we said we should observe. Was it 4 hours? Yeah, it was 4 hours. And we said it was left. So I wanted us to observe this. So you guys are gonna be understanding that yourself with time. But for now, that's gonna be all for today. We'll see you guys in the next. And then next, we're gonna be talking about more. We spoke more surface of candlestick last time on highs and lows and trend and support and resistance, trend line and support and resistance. Today we kind of like went deep into candlestick more. So next video we're gonna be going deep into high a trend line and support and resistance. And basically you already know what it is. You can practice it. It's just simply putting together highs, multiple highs, and we see it as a key level. And when market is above, we kind of see it as a support. When market is below, we see it as a resistance. And then trend line, on the other hand, is the same highs and lows, but we can connect multiple together, but on a, is it vertical? No, on a decline or what's it called again? It's not vertical, it's not horizontal, I guess, on a decline or incline way. So decline or incline way. Sharp, you get what I mean. Peace.